All right, welcome back for another episode of Carnivore Trades. Today is Thursday, February 9th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into the markets here. Doing this video a little bit early. We're doing a live stream for the members after the close, and very interesting day. So started off pretty inconspicuous, little gap up here. Actually a pretty decent sized gap on the spiders. And you can see all day long just distribution. So market's under a little bit of pressure here. Now there's not a lot of volume behind it. Take a look at Tesla here. It's kind of bucking the trend, although you might have a topping tail there on Tesla, very extended, up over 100% in the last month. We talked about that yesterday. This thing's kind of running out of gas here, but taking a look at the spiders here, we have done some technical damage. We talked about this trend line yesterday, and that is now broken. They might pounce it up here. We could get a fake breakdown. I can't rule that out. If we take a look at the hourly, well, let's go back to the daily here. This green bar low here, 407.57, that's got to get saved by the close, if you ask me. Otherwise, we've got a failed inside bar, and we're probably headed down to 400. You'll have a little bit of a pit stop at 405 there. But that's pretty good technical damage on this chart here in one day. Now, the volume's not that great. If the volume was better, I'd probably be just jumping on this short right now for a move down. And the other thing that's keeping me out of it right now is the semis are holding up, and you guys know, when the semis hold up, usually the market wants to hold up. They're a great leading indicator. However, we just tweeted this out, and this has really happened in the last hour or so, but take a look at Citi. So Citigroup getting clobbered here. Goldman also getting clobbered here. Big engulfing reversal. XLF still hasn't broken that green bar low here, but on the daily, but it is under a lot of pressure. KRE, outside move, wiped out this entire rally here in one day. KBE, large banks, same thing. What else? Transports, broken that green bar. So this is exactly how the last sell-off started, guys. So we had the transports and the financials breaking down. Remember back in December, we broke below this green bar low, which was the Powell pump. And so that was on 12.5. And XLF, same thing, right on 12.5. And then we look at the spiders here. That actually was able to hold up at least for one more push here. I'm sorry. This was 12.5. So you can see the spiders had not even challenged that green bar low yet, whereas the transports, fins, had already started doing that. And then the next day they kind of pushed it down. We had one more pop, and then we sold off. This was FOMC. What do we have next week? CPI. So maybe we come down here, and then maybe we can rally up and have one more pump like we talked about. But right now, this market does look a little weak here. If the volume was higher, if we were over 100 million shares, I would already be in this all-in short right now, because we're looking for a top pivot in this market. And we're starting to get some sell signals here. We're starting to see some lower highs here now on the daily and hourly there. With lower lows in place. Now, it's not, we're not going to dam it just yet, but we're below that 407.50 level now. We're continuing to sell here in the final half hour. So I did not see this coming quite this soon. We'll see what they do. I mean, there's still a half hour left. They could pop it back up. And in fact, my guess is they do pop it back up and save it in the last half hour, at least for right now. But I'm definitely starting to see some sell signals here. And we talked about this trend line yesterday being kind of technical damage. That would be the first sort of level of technical damage. But really good beat down today in the XLF and the financials and the transports. Take a look at the IWM. We talked about that the last couple of days. The IWM showing kind of leadership to the downside. So risk off. And you're actually already below this candle from the 1st of February. So well below that is the Russell 2000. Russell 2000, remember, small caps equals risk on. If they're selling off, that's risk off generally. But they are challenging basically that 20 moving average. Now, we could get a bit off that tomorrow. In fact, we got extended here. I'd say this actually probably does get a bid tomorrow. Unless someone knows something right now. This is a pretty suspicious rollover. I mean, it's almost as if like somebody knows something news-wise that's going to come out here. By the way, take a look at the VVIX. big. I didn't even realize this yesterday, but big gap up. And we talked about this a few weeks ago. The higher lows in the VVIX versus the actual VIX, which made lower lows. So a little bit of a divergence there, which is bearish or bullish for the VIX, but bearish stocks essentially. Big gap up yesterday, and that has surged. So VVIX, kind of trying to tell us something perhaps here as well. But the Qs are still leading. All things considered, they're basically down in parity with the spider state. Again, still relative strength from Tesla and relative strength from the semis. Also IGV, cloud software, which we like to look at, down just 0.25%. So I think if I had to compare it, and if we take a look at the semis again one more time, so here's your 12.5 candle, remember? So the semis were actually still the last kind of leg that was holding up before this sell-off here. But we had this pump and then the sell-off. The transports and the fins really broke down, and I believe the Russell did as well. Let's double check that right now. Okay, so the Russell broke down on the 6th, so it was the next day. But either way, you had the transports and the fins leading. The semis were still kind of hanging in there. And then the spiders kind of had this kind of, bounce back up. So basically what I'm saying is that we had a large news event, FOMC. We have a big news event next week, CPI. So yeah, you guys get the gist here. We're looking for a top anyway. It might be kind of a rolling top. We might get something of that nature. We do, I'm not going to damn everything just yet. If the volume was higher, I would say, look, it's already over with. But yeah, definitely some sell signals starting to come in here on the charts. And again, to go over it one more time, look at the 2-year. That didn't even need more than 2 days of consolidation to start breaking down. We are now below this green bar here. 2 years selling off. I really think that there's a chance that everybody's just kind of put it on the shelf. Oh, that's it. Disinflation has started. That's it. The Fed's going to start raising or lowering rates. The 2 years saying that's not happening. So, you look at the yields here. We're at 4.39, almost 4.4. So it doesn't look like the inflation trade's over. That's basically what I'm trying to say here. Let's look at ZB also taking some hits here. So that, we had a buy signal on it until it lost that green bar low. Now we had a sell signal and that has moved lower. So you see the TYX there, gap down and then closing green up 92 basis points on the yield there. TNX up 82 basis points, so 10-year there. This is not good stuff here. It's not good if you're bullish, and we've been kind of talking about that really all week. Take a look at the dollar. They ran the dollar down this morning. Nice little test candle. So we came down here and tested this kind of 102.60, 102.50 area. This is the area where we broke out of. There's your pivot high. You broke through that. We back tested it, closed back inside of this green bar. Dollar's holding up. And again, like we talked about yesterday, it's basically an inverted chart of the 2-year right now. So starting to get some sell signals. I don't know if, again, let's not get too crazy. The only thing that's keeping me out right now from jumping all in short is, again, like I said, the semis and the volume. But right now we're starting to see some problems here. Definitely more than just a few cracks in the armor. Transports have been weak all day long. And we have kind of XLE. Well, I guess I was going to say XLE holding up a little bit. This does better in a high rate environment. I don't know if we want to make too much out of that today, but we'll see what they do here. We're dumping out now. We're now $1 below 407.50. So it looks like they're using 0 DTEs to do this. I'm just going off the volume here. Maybe we get a gap. We could get a gap down with volume tomorrow, but I'm a little bit more neutral right now, because I think we can probably get a bounce off that 20 moving average. There's a little bit of consolidation base right there as well. And again, like I said, we have CPI next week. So I'm about to test the 20 moving average right now. So that might even get to 188 tomorrow, which is this previous trend line. And that goes all the way back to a year ago. So we'll watch this. Market's still dipping here. Nice dump. Look at Tesla about to break the opening range low here. NVIDIA now red on the day. Semis now red on the day. Apple well in the red. Microsoft getting hit pretty good. Amazon, wiped out that whole pump from last week. Google wiped out that earnings pump. Google's getting destroyed here. Look at that. And that is with heavy volume too. So definitely starting to see some sell signals here, and this is why we've been saying, like, don't buy into this rally. You don't want to be the dumb money buying the gap up at the top. I can't remember. I did tell you how bullish people were, how many bears flipped bullish last week after the Fed. And like I've been saying, this is exactly what we want to see, because this is how you get that rollover to take place here. So, yeah, Spider's still down 1% on the day. Q's down 1.2 now. Let's go take a look at, all right, so we mentioned, let's look at the Q's daily here. So again, kind of coming back into this trend line here. I'm not sure how good this trend line is anymore, but we're basically in a gap fill. We are still pretty extended from that 20 moving average too, so there's room to run on the Qs here. If they can hold this gap fill into the end of the day, maybe you could get some upside tomorrow. Again, I'm seeing kind of the same thing. Like I said, Russell is basically into the 20 MA, Spiders into the 20 MA. We might get a bounce here. They might save it for one more pump ahead of CPI. I definitely can't rule that out. And given how volatile this market has been over the last couple of weeks, I can't rule out them doing a super screw job move and ripping it back up one more time. But and again, that would kind of coincide with what I was just saying with that thesis where the Qs and the semis held that green bar from last month. So it's the same setup as last time. Fins, transports weak, Russell weak, Qs holding up. And so they're kind of like the last to go, so to say. But for right now, yeah, interesting price action. We'll see if we can hold this gap by the end of the day. I would normally take you guys into the close, but I'm doing like I said, doing the live stream right after the bell. So Dow here tried to break out of this little wedge pattern. That is back below that trend line. And we're basically holding that green bar low right now. We'll see if the Dow can hold up into the end of the day here. We talked about the semis already. They are now red. Lower highs here. Still above this pivot, still above this green bar, so still in technical good shape. A move down here would take you right back to 240. Then there's a little gap right there at 237. So those would be your downside targets if we continue to flush. IGV, basically the same thing, right? So still holding that green bar, still well inside of that green bar, only retraced about 50% of it. So that's holding up okay. But if you lose that pivot, you're going to go back to this. So 279. So we'll watch that. Moving into tomorrow and DJT, again, like I said, we break this green bar, you're going back to these pivots here around 14.6, 14.8. So somewhere in that range is the 20 moving average there. But nice breakdown there. So that level held. I told you guys there was a ton of resistance up here. And nice little sell. Not good volume either. The volume's not very good. That leads me to believe a lot of this is just 0 DTE driven. So we'll see VIX still kind of getting a bid here. That's above the 50 MA now. That's the first time the VIX has been above the 50 MA since we got to go all the way back to October, at least on a closing basis. I don't know if it's going to close above there, but we'll see. They might, like I said, they might save it here in the last 10 minutes or so. But that VVIX, big pop yesterday, and look at that continuing to surge up 6%. So, all right, we already mentioned rates here. Let's look at home builders. XHB, nice reversal, kind of a gap and crap day. Gapped up, rallied all the way up to 70.62 and a nice reversal there. Basically just fractionally below that green bar low now. So a close below that, takes you down to this 67 area. I talked about this yesterday. I didn't see much upside in these. I think they've already had their blow off move. ITB down 29 cents as well. VNQ back below the 200 and now the 20 moving average. So VNQ, again, outside move there, a little outlier bid. This definitely looks like to be on the weaker side as well. XLF, which we already kind of talked about. It looks like Citigroup's getting a little bit of a bounce here. I'm trying to take a look across the board. Looks Goldman's getting a little bit of a bid here, but really needs to save this green bar low here, 36.35. We are currently below that. They might save it last minute, but I mean, this is still an ugly candle either way you slice it or dice it. So XLF under pressure here. We talked about Goldman. JPM, so that might get up into this 145-ish area, and that was about it here, and that's kind of where it is here. And I remember the target on XLF, what was that, 37, and that's where we got 37.10. Pretty good sell today. Again, they could save it, but again, I don't see a lot of upside in these names anymore. Broker dealers here, nice outside move, still holding trend. So XBD is still showing strength here. And again, remember, these guys sell volatility, and there's been a lot of that this year. Okay, over to crude here. So a little bit of a different story. Crude is kind of a basically just an inside day. I mean, it did test the lows here, a little test candle, but closed inside of yesterday's range. So crude hanging in there. Again, nothing's changed on the bigger time frames, but it had an impressive bid this week. The one thing I'll say about this area here on crude is this inside bar is taking a long time to break out, or break down. And the longer that takes, the less likely it is to play out. But for now, it's still in there. So we'll just respect it for the time being. I'm not doing anything with it at the moment. XLE, which we talked about, still holding up a lot better than a lot of other names. You see the XOP and OIH there as well. OIH outside day down. So we'll see if that follows through finally to the downside. But bigger time frames are still very good on OIH. Natty here, a little bit of a bounce and possible change of character here. You could be seeing some seller exhaustion. Look at the volume start to come in straight down, and now it's just kind of like it's actually technically trying to work on a higher low here. I can't rule out another liquidation though. So basically what happens here is you got these funds that are, extra leveraged up here and maybe even up here, and then they get flushed out and you see forced selling. This is not like the fundamental case went out the window a long time ago on nat gas. This is just about when the forced sellers, when that artificial sell liquidity dries up. And it's just a waiting game right now. Once that does, you'll see a rally to 350 very quickly, maybe even $4 just because it's so overdone. But Natty, a little bit of a change of character here. It is finally trying to work on a higher low, although it's not much here. So let's not get too crazy. I wouldn't rule out a little bit more forced selling here. Anyways, over to the dollar we already talked about. Love this pattern. I would like to see a little bit more consolidation, and that can move higher. That should work its way up into the 106, 106.50 area over the next couple of weeks to next month. Gold here continuing to be under pressure. Down move, 1, 2, 3 bear flag. Continuation down. That should have support at the 50 MA, at least short term. You're going into this green bar, 50 MA there. You're a little oversold. If it had taken another week to consolidate, I would have said you could go through the 50 MA. But 1, 2, 3 days of consolidation, that will probably get a good relief bounce there in that area there on GC. Silver also taking a little bit of a hit. The 100 MA will also be a bounce area, again, going into this green bar. So that should be a good, at least short-term level. But ultimately, I will not be a buyer there, outside of maybe if you want to scalp it for a day trade. I don't have a problem with it, but I wouldn't look to swing it at that level. Platinum, that should get to the 200, probably even pierce it. Again, there's your green bar to coincide with that. You've got some pivots right in this area. So, that could be a potential buy area. It's getting a little oversold here as well. Nice little retrace there on platinum. I'm glad for this correction. I want to buy platinum again. And yeah, glad it's giving us a shot. We're getting a little bit of a bounce here. So XLF getting a bid. Transport's trying to put in a tail. Yeah, let's see if they save it. The volume is very light here. So they can save this thing pretty easily. And, it would be just like the market makers to paint this bearish tape and then surge it right back up and basically repeat this kind of pattern here. So we'll watch for that. But anyways, over to copper here, kind of an inside day. So copper actually holding up okay. But you still have kind of a bearish inside bar there on the daily. I still think copper has a little bit lower to go as well. Over to Bitcoin. So Bitcoin's, it's hanging in there, but you lost all these pivots. So we're probably going to go back down to 21.5. I should say, yeah, we'll call it 21 to 21.5 here. It's not that far away now. Back below the 20 moving average. Again, if we get a fake out, they could be doing this just to trap bears one last time. I can't rule that out. Again, the volume's not very heavy. So again, that's the reason why I'm not like trying to go all in short here or anything. But certainly a much weaker tape here. You lost this bullet structure. I'd say if they save it tomorrow with a big reversal, again, you could get up to 25, maybe even 25.50. But again, Bitcoin showing weakness, which is consistent with the rest of equities right now. All right, so let's get back over to the spiders. We got about 15, 20 minutes left in the day. They're getting a bounce off the close here. Just watch that 407.50 level. I would take you into the close, but I got to get ready for the live stream here. So just watch that level. If they take that out, if we close below that, that means more downside tomorrow. If they, close it above that, we'll give the market a slight, more, I guess, bull bias going into tomorrow. Anyways, guys, gonna wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.